From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
To the COB, I'm Juliette Sarli.
And I'm Nadine Blaney. It's a pleasure to be here with you on this Thursday afternoon. Juliette, I don't know about you, but I just feel like we're on this decline toward Christmas awfully early this year.
We are, but we are on an incline when it comes to the markets. Another record today, intraday. We're seeing the SIBO there up 0.8%. 1609 is where we trade. The ASX 200 probably likely to close at a fresh closing high and hit even higher during the session around 84.76. It's at 84.60 at the moment, up by 0.6%. The insurer IAG certainly a standout today, as was Zip, but really just this ongoing positive momentum. And speaking about, Nadine, of course, the transcendency into Christmas, we're asking a lot of the guests whether or not that Trump trade will foreshadow potentially the Santa Claus rally.
Mm-hmm. Yeah, we often say the Santa Claus rally around this time of the year. Look, I had a really interesting conversation with the investment committee actually today, so it'll be out for you next week. Just talking about them, maybe feeling a little bit vulnerable as we head into the new year. Everything's been going so well for so long. Best year for the S&P 500 since 1998. Our market doing really well, but a lot of it has come this year, as we all know, from the big banks. So what if there is a regime change?
Indeed. But today, looking into it, there was a lot of healthy moves, if you like. We had CBA, CSL both gaining, which obviously helps the market. But the outlier was really the healthcare sector. So some big moves in the likes of ProMedicus. Mm-hmm. We had Fisher and Paykel, which was the stock of the day on the call. It did rally into the result, but then fell after the earnings came through. But it did post some growing profits and revenue in the 6 months to September. Yeah,
and don't forget, we do have US markets on holiday for Thanksgiving. It's a big holiday, big travel holiday in the United States. So it's not going to be that exciting as far as the lead being set tomorrow. And yeah, there is sort of a strange half day of trade on Friday, but it's going to be pretty quiet from here.
Let's have a look at the healthcare sector, though. I mentioned CSL really helping to lift the market today. Gain of almost 2%. That was a double buy on the call from Grady and Howard. Mm-hmm. Cochlear looking good as well. Ramsay pretty flat there.
Okay, here are the big miners. So also, contributing to the gains we've seen today. BHP is up by 0.9%. Fortescue up by 0.8%. Mineral Resources, the outlier there on your screen, down by 0.7 or 23 cents.
And having a look at the banks, I mentioned CBA again helping to lift. It hit $160 earlier this week. It's not far off that today, $159.30. Macquarie Group also gaining. It's had a pretty good week because, of course, it's quite heavily exposed to the US, so probably okay to weather any potential tariff implications.
Yeah, we just, tariff is going to be an ongoing conversation until we actually see this shape and form and ultimate level of those tariffs being launched. But we did have word of a pretty positive conversation between the president of Mexico and Donald Trump. Mexico saying they will work harder to stem the flow of illegal immigrants going across the border there. So we've been keeping our eye on the lithium miners. No big positive move from WA looking to help support that industry there that's obviously been on the nose. Boy, it's amazing how these public companies are getting, private companies getting public support when the global cycle is against all companies of their ilk. But I did just editorialize there a little bit.
All right, let's move into the top corporate stories of the day. Kicking it off with AV Jennings. How
Unreal.
Is that? Nearly 100% gain there. This is as we hear that the investors Propium Capital and Avid have joined up to lob a $370 million buyout for the real estate developer.
Yeah, so US-based private equity, and I believe the bid is double the market cap of the company. So yeah, you don't see that very often, do you? Star Entertainment shares under pressure, further pressure I should say, down by 6%, reporting an earnings loss of $27 million in the first 4 months of the new financial year, trying to get some fresh blood into the board as well.
Now, I mentioned IAG was an front runner, I should say, today, buying the insurance underwriting business of Queensland's RACQ. This deal's worth $855 million.
Yeah, and ProMedicus. So yesterday it announced that it had redone a deal, and I was a little bit surprised that it didn't get a bit of an uptick, but there you go, because it is just trading at such a high valuation. But today we had Goldman Sachs come out saying that the contract cadence. So the steady cadence of new contracts helps justify the premium valuation. And so they're still bullish on the stock. They have a buy rating on it. They have a target price of $221. And there it is, trading at close to $250.
And then, of course, just a quick look at Fisher and Paykel, down 2.8%. We already sort of mentioned that. Let's get straight. There are a few other stocks on the move, but we don't want to keep our guest waiting either. Henry Jennings joins us from Marcus today. Henry, your overall take there on market action as we are seeing records hit?
Yes, good afternoon. I guess, once again, it's the same old stocks driving the market. ProMedicus joining in as well. It's one of those things that you can rely on. Up nearly 10% today, so that's pretty good for them. And CSL, good bounce back for them. Interesting, there was an article on Bloomberg today about CSL. I don't know whether that helped push them higher or whether it was Grady and Howard pushing that button. Probably more like Grady and Howard than Bloomberg, to be honest. But it's the banks again, isn't it? It's just staggering. When you look at the banking sector, and we were talking about this not so long ago, the amount of points that the banks have actually contributed to the index this year is pretty staggering. And what I'm also finding interesting at the moment is we're talking about this Trump trade, and obviously that has implications for the US. But I think, with Robert Kennedy in charge of health, now we've all focused on his anti-vaccine kind of stance and potential downside to CSL because of their massive exposure to vaccines. But one thing also to bear in mind, I think, is that the FDA could get a bit of a kick up the bottom in terms of how it operates. And I think that's playing into the hands of some of our biotechs, because when you look around at the biotech space at the moment, it really is doing very, very well. The likes of CU6, Clarity Pharmaceuticals, they're up 6.7% today. We're seeing CSL pushing higher. We're seeing ProMedicus. We're seeing a whole raft of biotechs, BOT, Botanics Pharma as well. Even Opthea catching a bit of a bounce today, up 7% odd. So that there is a bit of interest in our biotech sector. And when you look at Mesoblast, I guess, when you look at the sector, the two sectors that really stand out this year in terms of performance, with the exception of CSL, has been healthcare and the biotech space more specifically, and the bank. So it's interesting times.
Okay, so we'll be keeping an eye on that sector, no doubt. When you think about what other sectors could potentially outperform when we've got all of this geopolitical risk out there, and I'm not even talking tariffs, I'm talking the Middle East, Ukraine. Is it worth looking at sectors, or is it very much a bottom-up stock pickers market still?
I think it still is a bit of a bottom-up stock pickers market, and we have seen, many people have talked about the renaissance in small caps. And what has been interesting, I guess, and AV Jennings is certainly evidence of this, is that private equity has been willing to pay big prices, far in excess of what the share market is paying for some of these stocks. We've seen bids this week in a number of small cap players. We've seen Self Wealth from Bell Financial. We've seen AV Jennings. We're seeing, Big Tin Can under siege as well at the moment. There's Pacific Smiles. All these stocks are seeing increased M&A activity. HP1, hotels in that property trust space as well. So it's an interesting conundrum at the moment, because investors don't seem to be giving credit for some of these small cap and mid cap players, but private equity is, and the big caps continue to push ever higher and higher, which, at some stage, I think the story of 2025, if there is going to be a story, is going to be the sector rotation. And we've seen that in the US, where the leaders start to give up ground. I think 2025 could be that story here as well, that we will get that sector rotation, and those leaders, those really popular stocks, the Telexes, the ProMedicuses, the ResMeds, etc., they won't fall necessarily, but they may underperform, and some others may pick up the slack.
AV Jennings, not a relative, is it, Henry? No, I'm just kidding. Making a bad joke.
No, it's actually, it wasn't a bad joke, because when I first came to Australia, everyone thought that I was related to AV Jennings, which was kind of good in some respects, because at least it gave you
Got you
talking
good
point.
open doors potentially to restaurants. I will ask a proper question. Sorry about that. So we're heading into the
all right.
Thanksgiving lull, and then, as we mentioned, potentially maybe a little bit of a lull heading into Christmas here too, because a lot of that so-called Santa rally work has already been done in November.
Well, it has, and the Santa rally does tend to come later and later every year, and it's usually, usually we see a bit of a run up before Christmas, but the big gains tend to be as we hit New Year and new money floods into our market and people kind of place their bets on what they think is going to happen. So we do tend to see, things pick up, especially when the markets are quiet in terms of, a lot of people at the beach and not really looking at what's going on. So liquidity does dry up, and there is sometimes that push towards higher highs. And of course, this year we have the January 20th D-Day when Donald Trump takes the reins again in the Oval Office. So that is going to put another kind of volatility spike there. And given what we're already seeing in terms of, some of his policies by tweet, I'm not sure what a truth tweet is known as. There must be
I think we just say post, but yeah, I know what you mean. It's hard to say, isn't it? Truth social.
It is.
Blah.
It is.
Okay.
But,
were you a bit surprised to see the strength in this market? Fresh record high being set when we didn't have, we had a tepid lead from the US at best, and now we've got the US closed pretty much for 2 days?
Well, I think that that's part of it as well, Nadine, is that, with some clean air from the US, that helps. And, those banks which took a big beating the other day on the back of those tariffs being announced by Mexico and Canada, I'm not really sure why that was the case, but, they bounced back pretty much all those losses that we saw the other day, and that of course is the driving thing. And we have seen some good updates from a number of customers, another number of companies rather. ProMedicus is one. We've seen some good drilling results in a few gold miners. So the market is it's got a bit of a head of steam, and it's going to be hard to knock it down.
Indeed. All right, Henry, we appreciate your insights as always. Have a great day. Henry Jennings, not related to AV Jennings, from Marcus Today.
Got it. All right. You mentioned earlier that the stock of the day was Fisher and Paykel Healthcare. You had a chance to catch up with Grady Wolf from Bell Direct.
And Howard Coleman from Team Invest. And, I'm not going to give it away, but they both like this stock.
But, anytime a company reports profits up in the range of 43% or so, or 47, I think it was in constant currency, something like that, on the year before, you should be cheering and very excited about it. But it is on an incredibly high PE, and that's part of the problem. When a company's on a PE in this sort of range, you may want to hold what you've got, but you wouldn't rush out and back up the truck and buy some more.
So the result today, extremely good. I think the market was probably expecting COVID levels, but I think for me personally, looking at the company, you can't expect, like in the post-COVID era, a lot of healthcare companies have fallen back and changed what they're doing and changed the outlook of how they're going forward because they had to shift their focus. But Fisher & Paykel hasn't had to do that. They've still actually seen growth and net profit growth. So that means they're managing costs really well.
I got a bit overexcited there. They actually both like CSL. That was the double buy, but of course they're a little cautious on Fisher & Paykel.
But you can listen to that whole episode and find out what else they'd like or dislike. It's on ausbiz.com.au. But let's talk about the leaders and laggards. ProMedicus, we already detailed. Guzman and Gomez, no news, but up by 4.31%. Even though I've had a couple of conversations lately, on yesterday's call, to be precise, about just how exy that's looking. Insurance Australia Group, we talked about the RACQ, anyways, you know what I'm talking about. Insurance buy, and Zipco up by 4%. Larry Diamond looks like he's doing a bit of buying.
IDP Education, we also talked about on the call. Let's have a look at the laggards today. Star Entertainment, we touched on that being hit with a pay strike and concern over the remuneration. Paladin Energy down 4%. Liontown, we touched on lithium stocks there. Alcoa and Harvey Norman under pressure too.
Yeah, even though we had we've got a downgrade coming through from UBS in the wake of its update yesterday. Small cap land, mid cap as well. AV Jennings, no big surprise to see that leading the pack. And SciDev, a company that we featured on our small cap big ideas program not too long ago, up by 10%.
And to the downside, in the small end of town, AFT Pharmaceuticals, down 41%, nearly 42%. Paradigm, we just had them on the show. They did get FDA approval for their treatment for knee osteoarthritis, so that's actually a really interesting story. Hum there, Titomic and Novonix, which of course did that cap raise yesterday.
And look, we do hear from the RBA Governor, Michelle Bullock, tonight. I had a chat with Stephen Wu from Commonwealth Bank. He's a senior economist there, and he said she will be asked the question. Somebody in the audience will ask the question, do you need to see 1 or 2 quarterly inflation reads, going in the right direction before you will cut rates? Because he said if she says 2, then the CBA's expectation for a February rate cut is just off the table.
Wow.
If she says 1 or some, then they still reckon that a February cut is possible.
All right, let's have a quick look at tomorrow, just private sector credit for October. Of course, we won't have that lead, as we mentioned, with Wall Street closed for Thanksgiving. If you celebrate, happy Thanksgiving to you. Let's have a look at where the market is, because of course we've hit a record on the ASX 200, up 0.8% there on the CBO 200, 1609. And the ASX 200, I think that is a fresh closing high, 84.61.
Yeah, right. So, good day on market, and we will continue to keep our eyes as we move toward that European Open, of course. We will also look forward to seeing you from 9:45 tomorrow. We are live on ausbiz.com.au.
See you then.